out of all the crap that's ever happened in the stock market's history, it's always gone to an all-time high. The S&P 500, the Dow, the NASDAQ, this is just one more time. Hey guys, Omar Khan here from Theta Trading, and I wanted to talk to you today about someone named Ron Barron. He's saying this is a huge, once-in-a-generation buying opportunity, right?
We heard from billionaire investor Ron Barron early this morning, and he has a message. He wrote an email. This is a huge, once-in-a-generation buying opportunity. Huge, monstrous opportunity following June 2022, June 2020 as well crash. He told us about how he was talking to his sons who've been in the investment business for about 20 years now, and he suggests that they now have the same opportunity he had when he founded Barron Capital back on March 16th of 1982. That's when the Dow Jones Industrial Average was at 880. Yes, we're crying today about it falling below 30,000 for the first time since January of 2021.
First of all, now, who exactly is Ron Barron? Well, Ron Barron is a guy who came from nothing and became a billionaire. He started Barron Funds, Barron Capital in 1982. And what he told his sons is, this is a huge, once-in-a-generation buying opportunity. Huge, monstrous opportunity following June 2022 and June 2020 as well crash. Okay. Now, why exactly is he saying this? Well, oftentimes the stock market gets very irrational, right? It gets euphoric and it gets very irrational. So it gets too optimistic and too pessimistic. So Ron Barron is saying, and Ron Barron's a guy who likes to invest, for the longer term. He likes to invest in trends. His biggest holding, for example, is Tesla and funds. Now, he's looking at innovation being the driver. Okay, so now let's take a look at what's happened. Why has the market declined so much? Well, the market's declined so much because of this word that everyone keeps hearing, inflation, interest rates. Because inflation interest rates are higher, the stock market is concerned that, well, these companies will have less money to invest, people are going to spend less money, and ultimately that means companies are going to make less money. And that has put a huge amount of pressure on the stock market. But, as the old saying goes, buy low, sell high. That is the opportunity. So Ron Barron was telling his sons, this is a once-in-a-generational buying opportunity. Now, I started investing in 1998. I've been through a few of these cycles. And I'll tell you how this one feels to me. And we're going to take a look at some evidence, because it's not just about what people are saying. What does the actual numbers say? So I started investing in 1998, and I started working in the late 90s. And then as soon as I started working, 2000, 2001, huge market correction, especially in the NASDAQ. Stocks got bid up to astronomical levels. I remember I was working as a trader back then, and if any stock that had a .com name was mentioned on CNBC, it would literally go up considerably during that clip. Let's say, for example, lunchtime, they're talking about pets.com. Well, pets.com could go up 15 or 20% during the airing of that segment. That's how irrational it was back then, because people thought back then that the internet is going to make all kinds of people all kinds of money. And what happened is people started buying, and valuations got stretched to astronomical levels. And then you had a huge crash on the NASDAQ especially. The NASDAQ is a tech-heavy index, okay? So that was 01. That led to a recession. The recession was fairly bad, but guess what happens every single time? The markets return to an all-time high. Okay. Now, the second one I saw, and which is it was the worst one, was 08, 09. Okay, or 07, 08, 09, if you want to call it. That started in September of 2007 and didn't stop until March of 2009. It was horrible. Now, what happened then? Well, what happened then was, if you guys have seen the movie Big Short, I think that's a great way to really understand what happened. What happened back then was you had a bunch of mortgages and loans that were being given out to anyone who wanted them. You didn't have to even state your income, and you had these teaser rate mortgages, which means you'd get an interest rate of like 1% for the first 3 years, and then it would kick up to 5% all of a sudden. And people who were taking these loans didn't really understand them. They didn't understand what it was. They're like, because most people in life are not financially literate. So what happened was you had everyone buying homes, multiple investment properties, and the housing market in the United States got completely out of control, right? The old saying is, I don't care if it's a stock market or real estate, buy low, sell high. That real estate market ran up considerably. Okay, now it runs up considerably. Now what happens? Well, the banks that were giving these loans, and often they were often called ninja loans, no income, no job, just stated income. You could literally tell them what your income was and they would give you a loan based on that. Why? Because it was backed by your home, and homes always go up in value, right? That was the thinking. But the bad part was this. So everyone's getting loans and the American dream is alive and well and home ownership is through the roof. Great. But what happened was these loans were they should never have been given out. These are people who shouldn't qualify for these loans. They shouldn't have taken on so much debt. Now what the banks did is, instead of keeping these loans on their own balance sheets, they took these loans and they packaged them in the form of collateralized debt obligations or derivatives. And then they sold them to sovereign wealth funds and pension funds and anyone else who would buy them. And they said they're AAA, they're backed by US real estate. What could be better, right? But what they didn't say is that there was almost no underwriting. Anyone got a loan, people who shouldn't have qualified. So these were not AAA. These were actually garbage loans. And ultimately, as they say, shit hit the fan. And the market absolutely got decimated in real estate. And now why that problem occurred is because now people started defaulting on their mortgages. They couldn't pay their loans back, and housing just declined so bad. It was a horrible. I remember U.S. housing was absolutely getting decimated. Now there's a contagion effect to this. If housing is getting decimated and people are losing their homes, are they going to have money to spend to buy stuff? No. They're going to go on vacation? No. It's called the wealth effect. So people lost their jobs, and then what happened? These banks who gave these loans out, packaged them out, they started going under. Bear Stearns went under, Merrill Lynch got bought out, and the fear was that Citibank, Bank of America, Royal Bank of Canada, the fear was all these banks would go under. And what the big fear was, that you would go to an ATM and no money would come out. If that happens, can you imagine the confidence that's lost in the system? You have complete financial collapse. And the worst thing about this is, one of the worst things about this is that Wall Street took on so much risk. And ultimately, it was the taxpayer who had to pay a lot of this back. So that was 0809. It was a very different scenario. Okay? So let's take a look at some evidence of, again, remember the saying, buy low, sell high. Why is Ron Barron saying this? Now, those are the two market corrections I went through. And 0809 was horrible. This one doesn't feel anywhere near like that. I remember in 0809, people were losing their jobs left, right, and center. Housing prices were declining substantially. Nobody was spending money. And it was horrible. And it lasted a while. But ultimately, even then, the stock market went to an all-time high. Remember, out of all the crap that's ever happened in the stock market's history, it's always gone to an all-time high. The S&P 500, the Dow, the NASDAQ, this is just one more time. There's always a different reason it happens. These market corrections happen, like I said, there's always a different reason it happens. But ultimately, they've always gone to an all-time high. So what you should be doing is, when fear is at the highest point, as when others are greedy, be fearful. And when others are fearful, be greedy. Right now, there is a lot of fear out there. Okay? And that, I think, is one of the reasons that Ron Barron is saying this is a huge once-in-a-generation buying opportunity. Now, the reason I think it's different, I went through the 01, 08, I went through those two. The reason I have a feeling it's a bit different this time is because I don't see people losing their jobs left, right, and center. For the most part, the economy is still quite strong. Now, there's been a huge impact on the stock market. There's been a huge impact on the crypto market. We've lost a lot of money from just inflation. This has all been going on. But ultimately, there is a shortage of workers in the economy, not an abundance of workers. Now, this may get worse, but the stock market, like I said earlier, is in previous videos, this is a forward-looking mechanism. It's looking forward 12 months. Now, real estate market is now starting to get hit. But the reason it doesn't feel like those is because there's jobs. People are still spending money. So what the Federal Reserve right now is trying to do is they're trying to Increase interest rates to slow down the amount of money people spend, therefore slow the economy down so inflation can be controlled. Okay? Now, I talked about every single time in my life that I've gone through a major correction. I know they're painful. I get it. But mentally, one has to think about, is humanity going to be better off in the future? Are companies going to make more money in the future or less? I believe in innovation. I believe in humanity. And I think our lives are going to only get better. And that's why I will always use these as buying opportunities, not times of panic, right? Now again, buy low, sell high. Now let's take a look at what the evidence says, okay? So take a look at this chart here, okay? This is how do stocks do after they go into a bear market, okay? So bear market is defined as a pullback of 20% or greater, okay? Now let's take a look. This is going back from 1957 to 2020. There's a bunch of them here. You've got a bunch of different corrections. Now, this is the S&P 500, okay? Now, we're about 160 or 170 odd days, and now this is talking about trading days to enter bear market. Now, we're in a bear market. We're already 23% down on the S&P 500. It's substantial. It's nasty. I've seen this a few times in my life, and every time they feel like every single time it feels like the world's coming to an end, and it's not, or at least it hasn't been. You can't predict something like a nuclear war, but the world has never come to an end in the past, and the stock market has always gone to an all-time high. Let's take a look at the evidence, okay? Let's take a look at what this evidence tells us. So, 1957, you can see here, what happened 12 months later? 31%. 1962, 26.1% higher. 1966, 24.6. Now, I was not around for 1973. That was a lot had to do with runaway inflation and oil, and especially the oil embargo. So that was pretty bad. Now, the one that I did see, 0809, that was pretty bad. But even then, the stock market still returned to an all-time high. This has been a severe beating. Let's take a look at the average, okay? And then let's take a look at the median. So what do stocks do after they go into a bear market? Well, we can see 3 months later, on average, up 3.8%. And that's 80% of the time. 6 months later, up 3.6%, 60% of the time. And 1 year later, up 14.8 on average, 70% of the time. Now, 01, it was slightly negative. 08, that was a different one. Like, I don't feel it being the same way. I lived that one. That felt very different. People losing jobs, like I said, left, right, and center. It was all kinds of problems in the economy. Had the U.S. Government not stepped in and bailed out companies and bailed out Wall Street, it would have been calamity. So that one was pretty bad. But even that one, the markets returned to an all-time high. Okay? Now, this one doesn't feel the same way. Like I said, this one feels there's still jobs everywhere. So I'm very optimistic that Ron Barron is right. This could be a huge once-in-a-generation buying opportunity. I know it's hard to do, but you have to ask yourself ultimately, where do I think that the companies that I'm investing are going to be in a year from now? Well, we know what the history tells us. Look what evidence tells us. Let's take a look at the median. Median return 12 months later is 23.8% higher. And we know that every single time the market's gone to an all-time high. So can it get worse before it gets better? Absolutely. But don't forget what the evidence, what history tells us. When the media is scaring the crap out of you and telling you the world's coming to an end and this is going to happen and that's going to happen, remember their job. Their job is to scare you. Their job is to get your eyeballs on their screen so they can sell ads. That's their job. So they're not going to paint a rosy picture. They're going to paint pictures where you're like, oh, I better click on this article. I better watch this. But let's take a look at Ron Barron. Ron Barron's a multi-billionaire. Came from nothing. You want to listen to him, or do you want to listen to the media, or do you want to listen to evidence? I say we go with evidence, and I like Ron Barron's track record. Thanks, guys, and hope you guys enjoyed this video. Omar Khan from Theta Trading. Hit the like button if you like this video. Consider subscribing to our channel. We're looking to grow more content. If there's something that you'd like to see, please let us know. Otherwise, we'll see you soon.